Welcome back to the Global Ledger. I'm Justin. Last episode, we talked about why everything starts with liquidity. Today, we're going to go deeper, not into a chart or headline, but into the actual structure that makes global liquidity possible. We're talking about the global dollar system, how it works, why it exists, why it matters, and how it quietly touches every asset price in the entire world. And as always, I'm sharing this as someone still learning the system myself. I don't have all the answers, but I do try to explain the parts I have learned clearly and without fear. So let's get into it. So, what is the global dollar system? When people think of the dollar, they usually think paper cash, the U.S. Treasury, the Federal Reserve, or maybe even exchange rates. But the real influence of the dollar isn't in the notes or the exchange rate. It's the system behind it. Here's the simple definition. The global dollar system is the network of banks, dealers, institutions, and contracts across the world that borrow, lend, trade, and ultimately settle in dollars, even outside the United States. It's completely offshore, partly unregulated, highly interconnected, and absolutely massive. And most of it isn't happening inside the official banking system. It's happening in what we call the shadow banking system, where funding, collateral, and liquidity flow through relationships and balance sheets, and not through traditional deposits. It's invisible to most people, but it's the backbone of global finance. So why does the whole world use dollars? There is a simple reason. The dollar is the only currency in the entire world that is trusted enough to use for long-term contracts, global trade, and cross-border finance. Trust isn't just psychology. This is structure. So the U.S. has the deepest capital markets, the most reliable property rights, the largest bond markets, and the biggest dealer networks. If you live in Brazil, as an example, or Turkey, or even Indonesia, and you want to borrow money cheaply, well, you borrow dollars because lenders trust dollars more than your local central bank. And so a global dollar ecosystem forms. And I would say one of the most misunderstood parts of global finance would in fact be the eurodollar system. You'll hear people online say eurodollars are dollars held in Europe, and not quite. The eurodollar system is any dollar that exists outside the U.S. banking system and is created by non-U.S. banks. Non-U.S. banks. So a bank in Singapore can create a dollar loan. A bank in London can create a dollar deposit. A bank in Dubai can issue a dollar bond. So what does this mean? No U.S. cash needed. No Federal Reserve involved. This is where the global dollar system becomes shadow money. And this offshore dollar market is bigger than almost any official market. So I mentioned the Fed, and so why the Fed still anchors the global system? I mean, this is an important question. So even though trillions of dollars exist outside the U.S., the Federal Reserve remains the backstop. And why is that? Because the Fed is the only institution with the authority to provide unlimited dollar liquidity swap lines to foreign central banks. And another one would be emergency dealer support. Throwing up there. This becomes obvious in crises like 08, 2020, and I mean even 23. So the Fed didn't just rescue U.S. banks during those periods. It rescued the global dollar system. Because if global dollar funding stops, international trade stops, corporate rollovers freeze, hedging breaks down, and markets across the world, they collapse. So foreign central banks rely on the Fed, and the Fed relies on them. So this creates a structure, with the Fed being at the top, and U.S. banks and foreign central banks and foreign banks and corporations and markets kind of being under those layers there. So this kind of brings us to the next part, which is important for investors, possibly, maybe. The global dollar system affects interest rates, discount rates, credit spreads, what else? Equity valuations, people in real estate funding, derivative pricing, especially emerging market capital flows, commodity markets, and again, I'd throw crypto liquidity in there as well. So the answer is why? Because global funding conditions are dollar funding conditions. When the global dollar system tightens, some things that you could notice in the real market: FX swap spreads widen, credit becomes more expensive. Dealers, they reduce balance sheet risk. Liquidity dries up, discount rates rise, and asset prices fall. So in the inverse is true. So when dollar liquidity eases, funding becomes cheap. Dealers expand balance sheets. The want to take risk returns. Discount rates fall, and ultimately asset prices follow. They climb. So this is why you often see tech stocks rally when the Fed expands liquidity. Even if the fundamentals haven't changed, dollar liquidity sets, call it the financial weather. So this part connects directly to, I'd say, valuation. And that's kind of what we're going to talk about next is, so basically the dollar is the world's balance sheet currency. Probably be a good way to say that. So when you build a valuation model, basically, you forecast cash flows and you apply a discount rate. But that discount rate depends on a few things: risk-free dollar rates, global credit conditions, cross-border hedging conditions, and dollar liquidity. So even if a company is in Japan or Italy or Chile, it is still valued through the lens of the dollar system. So the dollar is the world's balance sheet currency. And when that balance sheet tightens, valuations contract worldwide. So, that kind of adds in the valuation piece to this. Now, there's pretty much like last part I want to touch on this, and that is why understanding the dollar system removes fear. And I will tell you that just on a personal level, this is kind of what brought me to understand what's going on in the world better, because there is a lot of scary stories, monsters in the closet, impending doom, type of stories being spreading. And so, that's everybody's right. But whether that was true or not, I wanted to, in my own mind, find the truth or get as close to it as I possibly could, and continue to do so. So understanding the dollar system, in my opinion, has removed fear for myself. So here's why I think this topic matters so much. So I'll give you a couple examples. Like the dollar is collapsing. The Fed will destroy everything. And think, quotes like that, like the world is de-dollarizing. But once you understand the structure, the pipes, the incentives, and the dependence, these narratives, they don't feel as scary. And the dollar system, of course, isn't perfect, but it's not fragile in the way people think. It's a network, and not a single point of failure. And it's deeply embedded in global finance. So by understanding the plumbing, you step out of that fear cycle and into a clear view. And that's really the whole goal of this show. Just want to thank you for listening to episode 2 of the Global Ledger. And just to recap, we explored the global dollar system, of course, its structure, its influence, and why it shapes almost everything that happens in the markets. So next episode, we're gonna go deep into the dealer system. This is the bridge between money markets and the hidden balance sheets that hold the financial world together. So if you're enjoying the podcast, share it with a friend or leave a review. It helps the show reach more people who want clarity instead of noise. So once again, I'm Justin, and thanks for being here.